Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, that's too loud. All right, Tuesday. Yesterday was a fairly quiet day, but we do got some interesting things going on. Most particularly, S&P 500 has been in new all-time highs, and I'm starting to see a lot of people getting interested in the markets again because of that. And meanwhile, things are not going well in China. So let's come and see how the markets reacted overnight. So here in the treasuries, really tight day yesterday, and now here in the overnight session, a little bit of a decline. There wasn't too much activity around when the Bank of Japan went today, but you know, I think that was maybe why yesterday was so restrained. We'll see what but they are a little bit lower. So interest rates are back into the 4.12-ish area. Okay, here's the S&P 500. So yesterday, tight day, but positive, and especially because of, like, you know, the previous week and the overnight action. They're currently on the upswing at the moment. Oil started to see some bullish movement yesterday as well, but, you know, it's still kind of like, yeah, it's just in there. There's this real concern, I think, still that if, you know, demand was really coming back strong, that oil would go back up towards $100 a barrel and it'd be a big mess. So gold and silver, they recovered this downswing in here, and now they're just kind of going sideways. Meanwhile, silver still struggling. Kappa looks as actually doing okay. So that's interesting that while we're hearing all these headlines about the terrible stock market in China, that maybe copper is actually possibly turning around. They are talking about stimulus over there, though, so maybe something happens. Here's the dollar sitting around 103 still. You can't see there was a little bit of a spike in the Japanese yen last night. Didn't really affect our markets too much, though, other than keeping everything really range bound. And then we've got Bitcoin. Bitcoin finally dropping below 40K, which is, I'm not going to say it's a disaster, but it is a little bit of a problem. Okay, that is kind of like a key psychological level that they've lost. Now, one of the things that I've been hearing is that FTX actually had a bunch of Bitcoin in the Grayscale Bitcoin Trust that they sold. And so that is maybe part of the selling in Bitcoin, but the ETFs overall have added funds under management, which means that even though FTX was selling like $1 billion, $1 billion more came in to replace that. So overall, it seems like the flows are, you know, like the ETFs are getting the inflows, but Bitcoin is just not going up. It looks like people are using it as an opportunity to take some profits. Could be still bullish in the kind of more midterm, you know, like the rest of the year, but don't really know. And right now there is this risk that you start to get below certain levels and it starts to trigger things, right? So that's where we're at there. Okay, so for today, we have at 10 o'clock, the Richmond Fed Composite Index is the only real major news that we got there. Oh, and a 2-week note auction a little bit later today. So, I would note, by the way, that in the first 5 minutes or so, I mean, let's give it another few minutes, but the Treasury is actually even more range bound in its opening range than it was yesterday. So I'm already kind of like on edge that maybe today will be very quiet trading. Also, good morning, Jiwi and Dom Dom. Well, let's go over to Zero Hedge to see if there's any news stories since I woke up. Ukraine's spy chief, not even conceivable that we can win without a massive mobilization. I'm kind of starting to get concerned that they're to the point where, Russia could do another. Well, I don't know. I don't really know. I don't know enough about the situation, but it seems like the support for Ukraine in terms of like assistance from the West is really drying up and that they're in trouble. I tell you what, guys, this is always the way that it goes. This is always the way that it goes in markets is you'll be hyper focused on one specific issue, and then something else will come along and completely change the game, and you'll forget about that original thing that you were worried about, right? It's like you're sitting here, market's at a new all-time high, Donald Trump is going to be the Republican nominee, and then all of a sudden, bam, war with Iran, kapow, revolution in China, kapow, like Ukraine gets taken over by, like crazy. And I think all three of those things would be like crazy things that are relatively low risk of happening at this point. But at this kind of juncture, that's the sort of thing that happens. There's also some things on the good side that I guess could happen too, although I can't really think of what they are. I guess I kind of have mixed feelings about the markets being at all-time highs, because I think that it's completely sensible that we would finally recover things from the doozy that we got in 2021, 2022 and reach new all-time highs and everything. But this market just does not look particularly healthy to me, right? Like we're at all-time highs. Meanwhile, market breadth is terrible. It's only like 7 stocks that are actually leading everything higher. We're getting massive layoffs, even from the companies that are like going up. Okay, like Google is doing massive layoffs. All of our soft data is kind of signaling contraction. We're facing a liquidity crunch because we're about to get all of the money out of the reverse repo facility. We're finishing quantitative tightening, and then the BTFP will end in March. And the Federal Reserve thinks that it's going to reduce interest rates in March. But how do you do that if the equity markets continue to rally like this every day? Or like they've been doing, let's say. Not like this, because they're not really. Well, I mean, they're rallying pretty good this morning. That is 10 points. You get what I'm saying? So we'll see. I traded UB the morning, 3 ticks, take profit, no stop loss, and decided to go and buy groceries. And while I was away, it touched my take profit. Oh, it touched it, but it didn't fill you, and then it went against you 7 ticks, and then it came back and touched it. So did you, when it went against you 7 ticks, did you bail? I've had that exact thing happen to me countless times, man. Where I'm sitting in ZN, and it's like I just barely don't get filled, and then it goes like massively against me, and you're like, what the heck? Or situations where you're getting in and you don't think anything particularly important of that particular price, you know? It's just like, well, I just want to get in. This seems like as good of a place as any. And like that's the exact spot where it turns around. Oh, that all happened while you were away. So you did end up with the winner, even though it was Sounds degen. What would you have done if it had gone like 16 ticks against you, though? What do you mean, does your order entry box in Jigsaw work? It surely durely does. It's a box. It shows you stuff. I usually have my macros set to limit instead of auto. Nothing special about it. I do not, you notice though, I have it set to serious, which means that's one of my sim accounts. I don't know if I'm gonna turn on the live account today. Not when it starts like that. That's not an encouraging sign. You can't place orders. Interesting. So when you have your box, and you go down to this top little drop down, are there multiple options there? And does it not function regardless of which account you have set? If I had a stop loss, I would have ended with -1. That's a really tight stop loss for UB though, dude. Okay, you get multiple ones and it doesn't do anything regardless of which one you select. Have you tried 1, restarting Jigsaw, 2, closing the DOM that you want to be trading on completely and creating a brand new one? You can only place orders on the CQG app. I'm assuming that's like you would have to close Jigsaw, open up CQG, and then you can submit orders. Can you submit orders on a sim account? May you reinstall that? That's really weird. The kind of issue that you're describing is the kind of issue that, like, it's hard for me to conceive how it could happen. Like, there's got to be something screwed up on your side. What could possibly be it? Have you checked to make sure order entry? Well, so if you have it open like this, and then you turn off order entry, it let you to see how all of the text went black. So it kind of tells you that you can't enter orders. Trying to debug these sorts of things over text is kind of really frustrating because I want to like try this and try this and try this, and you know, and maybe when you do it, there's something happens that you don't notice that I would notice or something like that. Oh yeah, you're totally right. Like his problem is either something really, really stupid or like messed up beyond comprehension. If you place orders on CQG, you can see it on... Wait, so how do you have CQG and Jigsaw open at the same time? I thought that you weren't really able to do that with CQG unless you had like the multiple connection license. Okay, so you use the jigsaw bridge. That I think is a critical point. So, have you tried shutting down NinjaTrader or whatever it is that you're using the bridge with and connecting to CQG directly? Then what does it do? It's not responding right away, so I think that means he hasn't tried that one yet. See, now that you say that the bridge is involved, now it's like, okay. That's a place where you could maybe have a problem that could potentially cause that. Although, is that like, there is a bridge other than the NinjaTrader one, right? Yeah, you can place them in well, what I'm saying is like, so, let's see here. How do you do this? I don't remember how the bridge even works. Oh, is the way the bridge works, you don't use the connection manager, do you? It just gets the data, right? Can you pop? Well, so what I have open over here in the upper left is ES. So I have it set up so that I'm looking at the order flow in ES, but if I were to submit any orders, it would do it in MES. Also note that I have my DOM set up using tick, what do we call it? Tick aggregation, something like that. So it's not showing every quarter point. It's only showing every full point. So my DOM is going to look a little different from yours if you have every quarter point. The tweet tape with the sweep order thing is very cool. Yeah, it is. Anyways, in debugging this issue, AO, like one of the things that we would want to do is eliminate the bridge as the possible source of the problem. So if you go in and you open up the connection manager and you set Jigsaw up to connect to CQG directly and not use the bridge, right? Then that would eliminate the bridge as a problem. So if you change that and then you switch your DOM over to using that direct connection, do you still have the problem? Why would you need a separate connection for that? You should be able to just... Well, sorry. So when you say you're using the bridge, are you connecting through NinjaTrader? Are you connecting through NinjaTrader CQG Continuum? Says yes, I am. So then that would prevent you from, because they don't let you connect to it directly. They only let NinjaTrader connect to it. So how would we potentially show that the problem is with the bridge? You have to get a third connection? No, this doesn't make sense. That doesn't make sense. So if you have one connection you're connecting through NinjaTrader, and then through NinjaTrader, you're using the bridge to send the data to Jigsaw. Why would you have two connections for that? That's still one connection. You'd only need two connections if like NinjaTrader is connecting directly and Jigsaw is connecting directly. And another connection for the CQG app, I see. So if you put an order in NinjaTrader, does it show up in Jigsaw? I've not tried that. Okay. That might potentially show us that the issue is the bridge, but we'll see. We'll see what it does. It's high at 98.25. I'm not sure what you're talking about. Talking about the one from yesterday? Well, the what will probably happen with Jigsaw is they'll probably get what's her bucket. I don't remember her name. I've spoken to her maybe twice though. But there's like some support people that they'll have you like share your screen with them. But if you can like submit so like what I would do is I would come over into NinjaTrader and, you know, I would go to like ES or something like that and on a sim account in NinjaTrader, submit an order or enter into a position. And then over here in Jigsaw, if you're using the bridge, then the sim account should show up as one of your options in your order window, right? Switch to that sim account and see if you can see the sim order that you submitted in NinjaTrader. Aha! So if you place a sim order so if you place an order in CQG app, you see it, which is kind of weird. But all of the data that you're looking at in Jigsaw is coming in through the bridge, correct? Correct. Okay, so if you submit an order through CQG, it shows up in NinjaTrader and then gets translated over to your Jigsaw, which suggests that the bridge technically does work. But if you submit a sim order over in NinjaTrader, it does not come through the bridge and show up over here in Jigsaw. So that does possibly suggest that it could be an issue with the bridge. You get data over in Jigsaw correctly. There's another thing is like with this drop down, because there you can have NinjaTrader sim accounts, Jigsaw sim accounts, and you know your live account. So it doesn't matter which one of those you select when you come over into Jigsaw and you try and put an order in, you don't see it. You don't even see like the, you know, the little order, I'm in the queue sort of thing. If you put like a limit order up, don't see it. Okay. So try this. Come into NinjaTrader, workspaces, go and create a new workspace, close down the old workspace. Okay. Then restart NinjaTrader so that there's not any possible anything running on. Okay. Then when you start it back up, you'll have a blank workspace. You know, add a new market analyzer and add the Jigsaw thing to that does the bridge, right? And then restart everything. So like shut everything down, open up NinjaTrader first, then open up Jigsaw to ensure that like the bridge connection is working correctly. Yeah, option B, ditch NinjaTrader and use something better. I'm really not a fan of the CQG continuum. You did that last night and that did not work. That's weird. See, I can recall having an issue where like either I wasn't getting data correctly or orders weren't going through correctly because of the bridge. And that it was like I had to like start things in the correct order and all of that sort of thing to resolve it. Yeah, it does kind of just, I don't know, man. I have really mixed feelings about NinjaTrader, right? I mean, the reality is I don't think that any of the platforms are perfect. They all kind of have one little quirk in it that bothers me. So do you have the thing where when NinjaTrader loads up, it will like trigger NinjaTrader or Jigsaw to start as well? Yeah, if NinjaTrader goes down, Jigsaw goes down. Just my observation has been that the CQG continuum data is not quite as good as the regular CQG data. And I really don't like kind of the way that NinjaTrader limits you. That's basically now, if you're going to use NinjaTrader, you have to use them as the broker. I don't like that. And when I was using them as a broker and I had the whole setup that AO is using, I didn't like it. I seems like every day there was something about it that bothered me. It's kind of funny because I can't even remember why, but I just remembered disliking it every day. Whereas this current setup that I have, which is super, super jank, by the way, because I'm connecting to Rhythmic and then both NinjaTrader and Jigsaw are connecting directly to that, and I'm using my trial license of NinjaTrader instead of my developer license, which is really, really freaking weird, right? But I never have any problems with it. What's with that? And yeah, if Jigsaw got to the point where I think that if Jigsaw adds like spread charts, if Jigsaw added spread charts, I would maybe just ditch NinjaTrader completely. Maybe. Even though NinjaTrader really is like the best platform to like make custom stuff with. But that's why I have like mixed feelings about it, right? Because I want to continue developing stuff and making indicators and trying to find new things and stuff like that. Is just like the platform is moving away from me, you know? NinjaTrader 8 is like a Glock of the futures world. I had to think about that one because I kind of feel like Glock is, not that I'm like super versed in weapons, but my understanding is that Glock is like, it was really good at one time and now they're just kind of riding on their past success, and it's still just as good as it ever was, but like they charge you way too much for it, you know? I feel like Jigsaw's not playing nice with NinjaTrader 8 users paying the same price as every other customer, yet because I use NinjaTrader 8, I am denied access to Jigsaw's charts. Not cool. That's exactly it, man. Like that was another thing that really bothered me, was that I wanted to try all of the new Jigsaw features and give feedback or whatever it was, and I couldn't use any of that because it doesn't work through the bridge. I understand why. Okay, you have to understand that it's like it's coming through a different pipeline, and so there's like a whole like other section of stuff that they would have to do to get the Jigsaw charts to work with the bridge. And they were just like, well, we're not going to do that, because why would you use both Jigsaw and NinjaTrader charts? Fair enough. We know you're besties with Peter. We should, I don't know if we're besties. I tell you what, man. I really, really like Peter. I'm like, okay, whatever we got to do. I totally trust you. I think that you know what you're doing. It's great, right? But he is like autistic. Like, he's really cold. He's like cold autistic. You know what I mean? So I don't know if anybody's besties with Peter, right? He is. You're not just gonna like convince Peter to do something because you're good friends or some shit like that, right? You're gonna have to have a really, really good argument as to why he should make a change. You know what I mean? You ever had like bosses or technical directors often tend to be like that, right? They're not buddy with you. They want to make the right decision. That's all they care about. The best would be to have Jigsaw and to use NinjaTrader 8 charts. Maybe. I kind of feel, though, that there is nothing in the Jigsaw charts that you can't do in NinjaTrader 8, to be honest with you. So I do think he's right. Why would you want to use both? I would only want to use... Now, it would make sense that I would only want to use Jigsaw charts. I think there's a lot of cool things about the Jigsaw charts. But see, the setup that I got, it gives you the the best of both worlds, because you're not connecting through the bridge, you're connecting to Rhythmic. And when I connect to Rhythmic, I can still use Jigsaw charts. and I can still use NinjaTrader charts. I just can't use my real NinjaTrader license. That's the downside of that one. So I don't get like NinjaTrader's order flow indicators, but I didn't really use them anyway. They're all the same thing. No, I don't know about that, but I'm not exactly sure which comment I just made that you're responding to there on that one. I tell you what, it would be very difficult for me to duplicate the Jigsaw DOM, and it is not the same as the other DOMs. And I know that. So here's one of the reasons. Let me tell you the long story. Okay. When I worked for the bank, okay, they originally put me on something called the Ocean team. So Ocean was a C# framework that all of the applications in the C# applications on the firm were based on. And Ocean did like 3 major things, okay? The first one was that it gave you like a control center sort of a thing. So that people, all they would have to do is deploy their binaries into Ocean. And from there, all you would have to do is provision an application to somebody and it would show up in their control center. So it was kind of like a way to make it easy to install applications to everybody, right? Like a distribution system. But then it was also kind of like your NinjaTrader control center, where you'd come in and you have this thing and come down and here's all of the different windows that you can open. Okay. The second thing was that it created certain data providers. So if you wanted to hook into live data in your C# application, it was very easy for you to make that, right? And then the third thing that it did was it provided certain unified GUI controls. So there was like this, and I don't even remember which vendor it was, but there was a vendor that had custom controls, and some of these custom controls allowed data binding, right? And we kind of had our own custom versions of those, okay? The most important one of those was the data grid. So making a grid, okay, like you're talking about here, or even if it's like a spreadsheet sort of a thing, where each individual cell within that grid is constantly updating, there is a lot of technical stuff involved in making that function and be responsive. So if you took the default one, so that is to say, if you went out there and you just decided to make your own DOM and you decided to use somebody else's existing data grid that's out there, you would not like how responsive it is. It would be like you click and then like 3 seconds later something happens, right? Because you've got so many different things that are updating, and like, how do you do that efficiently, right? And in C# in the C# world, they're mostly concerned with making it easy for the programmers to bind to the data grid and possibly have two-way data binding, right? But when you need data to be fast, then you have to make your own custom version, right? And what Jigsaw did was they took one of those existing data grids, they started using it, they immediately saw the same deficiencies in it that we saw when I worked for the bank, and he made his own. That's what happened with Jigsaw. So they're not all the same, and they're not intangibles either. They would be things that like would really bother you like right away. Nah, I'm not talking about like milliseconds differences here. I'm talking about like real usability challenges. Yeah, the base of Jigsaw is a lot of work, and what they had to do to get the charts to work was a lot of work. Oh, there probably is somebody who's outperforming everybody that trades, DOMs by using, but you're kind of getting into a different issue, right? If you want to trade the way that I trade, I don't think that you're going to be able to do it better on NinjaTrader, not even close. But what you could trade a higher time frame, and then you probably would do better, right? They're using patterns. Well, so this just brings me to the question of the month. The question of the month, which is it just intraday? Is it just the intraday time period that has issues with these patterns and stuff like that? Because it seems to me that when you take a pattern and you combine it with a portfolio, so that doesn't necessarily mean like I have all of these instruments, that I'm in all these positions all the time, but rather that I have a set number of instruments that I watch, and then I take signals on that set number of instruments when I get my quote unquote technical signal. So it seems to me like the combination of those things, that is how a momentum strategy works, and that there are edges out there in that. And there is some evidence, I think, over the past few years to suggest that maybe the primary edge in momentum has been diminished in a regular market. But that doesn't mean that there aren't other edges similar to that you can find, because there's all sorts of things like adding mean reversion to it and this sort of a thing, right? Huey says even moving averages work well on 1 day and above timeframes when trading stocks, right? Well, and that's why I don't get involved in the TA versus order flow arguments. Well, but it's not okay. But that's not like the point of that whole thing, right? It does feel like something's happened recently that he's a little bit more cynical. But the whole question is like, what predicts future orders? Is we have this empirical understanding of markets, and my conclusion from all of that empirical data is that in order for us to make money from quote unquote trading, not investing but trading, that you have to have something that essentially predicts future orders. You might not be consciously focusing on that, but ultimately that's what you've done, is you've bought it and then other orders came in behind that later that pushed it up, and that's why you made money. Okay, you have to predict future orders. Okay, if my time frame is the next 2 hours, what predicts future orders? That's the real question that we deal with here. Is in the next 2 hours, what can predict future orders? Right? And my contention is that technical analysis and patterns does not predict future orders over the next 2 hours very well. Does not. And in order for me to change my mind on that, I'm going to need to see real empirical data that suggests that that's not true. That there actually are some things based on some pattern or whatever it is, some sort of technical analysis based on price and volume that does effectively predict future orders in that 2-hour time frame. Right? Now, when it comes to order flow, what do we have with order flow? Well, there are empirically proven behaviors about order flow that I would qualify as predicting future orders, but they are very limited predictions. Okay. So for instance, one that comes to mind right now, because somebody was talking about it on Reddit yesterday, is order clustering. The behavior that you're going to see in ZN is going to kind of be a little chunky. It's going to be like, you're not going to see a whole lot happen, and then you'll see a bunch of orders come through, and then not really see anything happen again. And there are kind of these models that you can use to kind of, adjust your best bid, best offer based on that chunkiness, essentially, right? Okay. So that is a prediction of future orders, but it's super limited. And can you actually make money off of that prediction? You probably can't. If you are a robot, you can. If you're a robot, that's really useful to you, but you're also combining it with some sort of a correlation, something like that, right? Okay. So when it comes to order flow versus technical analysis, yeah, order flow has like real empirically backed stuff behind it. And ultimately, you're just not seeing what's actually going on without watching the order flow. So you're just, there are situations where your conclusion about what's going on, like if I'm in a range and I'm seeing tons of volume trading in that range, what's happening? Is it that there's tons and tons of buyers and they're running into a huge iceberg? Is it that there's tons and tons of sellers and they're running into a big bid iceberg? Or are you seeing flow going both ways? Because each one of those scenarios, I think, means something very, very different for that particular situation, doesn't it? Right? And if you're not watching the order flow, you can't see that, right? But at the end of the day, so we know that if we really want to see what's going on, we need to be able to watch the order flow. And we know that there are small edges that we could make money from with HFT. But as a retail trader, can you make money day trading with that? Probably not. And so it comes back to, is it just the time frame? Right? We are simply not informed enough to be able to find consistent edges on an intraday time frame. Because that seems to be the conclusion that I'm starting to come to. Is I'm not saying that you can't do it, but like with the information and the sources that are available to me, it's not consistent enough for me to justify the day trading. You know what I mean? It's like right now I'm on like a 3-month losing streak. It seems to me that can just happen. You can, whatever it is that the market is focused on is something that you don't get a whole lot of insight into, and so you're behind the curve, right? And for me, if I can have like a 3-month long losing streak, then what is the point of day trading? Even if it's like ultimately profitable over a year or a 5-year period or whatever the deal is, right? To me, the point of the day trading is to kind of avoid that kind of volatility so that you can bring in money every month and like live off of it. So if the market has moved to a point where you can't really get that kind of return, that kind of performance, then why bother with the day trading, and why not go to other strategies that will have more that will have equal or greater variance, but ultimately bring in more money? You know what I mean? Nah. I mean, like honestly, the losses that I've had could feasibly be, you know, if I was on a trade and I was sizing up, I could probably make it all back in one day. I probably wouldn't do it like that, but I don't, the losses that I took, with the exception of that $50 one, which really shouldn't have happened, but they're not that unusual, and I've had runs on the bullish side just as big. You wouldn't take the deal where you make 300K a year every year day trading, with making 350K in 1 month and losing 50K the other 3 months? I would totally take that. Well, no, I don't think I would actually. No. But another key factor there would be how much capital do you have to be working with in order to do that, right? So I'm saying, okay, if you can have a run like that, lose, but maybe you make 300,000 in a year, right? Okay, but probably you have to have $1 million in capital to work with first, right? So now you're making 30% over the year, right? Versus a momentum strategy where you can have years where you make 100%. Right? Like ultimately, if capital gain is your primary goal, day trading doesn't make sense. Right? Day trading only makes sense in order to make it a job and bring in the consistent return. Right? Am I making more than $1,200 a year? Not last year. The year before that, yes. But I'm trading super small. If I was trading a full ZN contract, I probably could do that. No, I'm talking trading too. But although I'm not just counting my my futures trading. You'll lose. Well, it seems like right now I do, yeah. So I feel like that, like, we were going in one direction, and now you're pushing us in this other direction to discuss something that, like, sure, but why do you want to talk about that? The only thing that changed for me is I realized that investing is more lucrative than day trading. Well, dude, like, fucking hell. I don't. That's like. I mean, haven't I always said that from day one? I don't understand where the disconnect is here. Yes. If your primary goal is capital gain, don't day trade. Yeah. I've always said that. Okay. But you don't think that other people understand that. I hope they do. Okay. But all I was getting at, because of what you brought up, is my point was, if your primary goal is to understand the market as well as possible in that 2-hour time period that we have, is the effectiveness of technical analysis and the effectiveness of order flow and the empirically proven stylized behaviors of order flow important? Yes, they are. And there's almost no question that the stylized behaviors of order flow are important. But there's absolutely nothing that we have that suggests to us that quote unquote technical analysis is at all relevant. I was just saying that both for the retail trader will still yield the same long-term result. So now that part I would disagree with. So here's why. So I think the way that I think of it is, okay, so right now we're having a hard time finding an edge in the market, right? Whatever it is that's driving the treasuries on a short-term basis is different from what I'm used to, and I don't understand it. Okay, but someday we'll run into a market where we do understand it, or something about the market will change, or some sort of new opportunity will come up, right? So if that new opportunity comes up and I have a really solid understanding of the market that's based on empirical data that allows me to take advantage of that new opportunity, right, then there's an advantage to that. Whereas other people that don't have a correct understanding of markets and don't look at these things, they're going to go and they're going to try to take advantage of that opportunity, but we're going to beat them because we understand it better, right? Or on the flip side, because I think for me right now, primarily, coming in and watching this market every day, there is real insight that we gain from this. There really is. We understand what's going on at the base level of the market in a way that other market participants don't. And that is an advantage. And I think that it does make your investing better. So if you come in here and yeah, you might not be making money from day trading it, but just focusing your attention there and everything that you glean from the markets from doing that, then when you go out and you trade the higher time frame, you're going to be a better trader than the people that haven't done that. I absolutely believe that. But odds of bids vanishing and buying, stopping the moment you decide to go long are the same as the support zone. Well, but I'm not using any of that stuff to make a decision, right? I'm trying to use the information that I know about what potential flows might come through, right? So I know that there's a few like central banks and stuff later in the week. I know that there's a 2-year auction today. I know that in 40 minutes there is Richmond Fed Manufacturing Index. And I know what the order flow is doing right now. And that all kind of leads me to the conclusion that we're probably not going to see too much action today. We would have already have seen it before now, right? And that's how I make my decision. But I would not, I wouldn't block Uzi. You miss a lot. Because I probably talk with Uzi more than anyway. But another thing is I would it's a lottery ticket if you put your mind to look at what happened in the past to decide what might happen in the future. Well, that's kind of an unproven statement, but I think that's what we're saying on an intraday basis, right? But I wouldn't look at it as a lottery ticket, because I think what a lot of people do is they say, well, you know, if you're trading or whatever and you make a ton of money and you just make that ton of money one time, right? Then you don't actually have an edge. You just got lucky. You know, and I think that some traders don't want to have like that one really big winner that just makes everything for them, and then because it would feel less rewarding. It wouldn't feel like you had earned it, right? And part of what I'm trying to say is that that's the way that you make money from doing this, is you catch the far right tail. And there are some things where all you have to do is catch one and you're set. Like, catch one far right tail and then just stop doing what you're doing. You know, it was like, if you've ever read the Jigsaw book, he talks about one of his mentor, that he was trading something, and I'm gonna bet that this guy was probably taking on excessive risk to do it, but you would have days where like he didn't have a single losing trade like all summer, right? And then one day, through some of his options gambling, he caught a really big options trade, and it was like enormous. And that would have had him set for life. He could have just put that aside, and then he could have continued day trading, and you know, he would just be set. But he didn't do that, and eventually he lost it all, right? Because it's like, oh, you're lucky, and I want to be able to continue to make those big trades and get even bigger and bigger and bigger. But kind of what I'm saying is that, like, for some of these things, you know, you only need one. You get the big one, stop. What's the most reliable indicator? Well, the problem with I can tell you the most reliable indicators, but the problem with the most reliable indicators is that you're going to have to act fast, right? So the most reliable indicator is a piece of market moving news just came out, right? The Federal Reserve, yeah, it's a blackout period, but if somebody from the Federal Reserve came out and said there's absolutely zero chance that we raise interest rates in March right now, the market would move on that. Okay, and I can pretty much guarantee you which ways the different markets would move based on that as well. Right. That's reliable. Knowing something that is going to lead to a very large player to buy the treasuries up or down, that can be reliable if you actually know that they're coming through, or you know enough about their strategy to know that they're going to be coming through. Bollinger Momentum RSI divergence. Like I've tested all of these indicators, man. I've literally done thousands of strategies, and I have never seen a lick of evidence to suggest that any of that stuff has any kind of effectiveness on an intraday time period. There's only two things that I know of that have effectiveness on an intraday time period. One is being a market making robot, which is to say you're managing a large amount of inventory and you're making money from the spread, and you're fast enough to get to the front of the queue. Okay, so either being a market making robot or being informed. I do not know of anything else that is effective on that intraday time period. Most people are just trading noise, and they can kind of make money in the short term, and then eventually they blow up, right? On an intraday time period, a higher time period, it's a different sort of a thing. So have you ever backtested order flow strategy? Yes and no, Tarek. So I have one strategy in particular that I think is really good. But I can only test it on a year of data. So I only have a year of data. So there's some question as to how effective it really is. Yeah, so the bigger question is that how then do you get profitable? Well, so if you are informed, you can make profitable trades. The issue is how do you remain informed, right? That's kind of something that's like it's in your control, but it's not. I mean, it's totally up to you. But it's a completely different paradigm from what most people think of with trading, right? Most people that are thinking with trading are trying to find some sort of statistical edge, and you hammer that edge and you do it, and eventually you're going to come out with gains, right? Whereas when I'm saying you need to be informed, that's like a different game, right? You have to do as much research as possible, and sometimes the market just won't cooperate, and you just won't be informed, and that's kind of the game. Right, but that what we call speculating, right? I'm saying be a speculator, essentially. Be a market maker or a speculator. I don't know if you can be a market maker anymore in these markets. Don't know, right? I do have lots of videos on being informed, and trading the news and all about trading interest rate policy and stuff like that. I have videos. Yeah, basically do research on the market you're trading. There are all sorts of market analysts that are constantly giving information, like from the people that are at the trading desks at Goldman Sachs, etc., that tell you about current positioning and certain strategies and things like that you can potentially use to predict future orders. Lucas says, well, no, you can't be a market maker in today's markets. Oh, I mean, I wouldn't say you can't. Let's just say that whatever it is that you would need to be able to be competitive in this market, assuming that we can't beat them at the queue, but perhaps there is some other edge out there that is as of yet undiscovered, and we just need to discover it is potential, right? Have you tried volume profile? Yeah, so I have a video. My two most recent videos, if you go to the channel, are about volume profile and about price action, and showing you back tests on the most popular strategies of those types, and showing you where they aren't very effective on intraday trading. They're not effective day trading strategies. No. I think that you have to watch the order flow to understand what's happening right now. But if you can't be a market maker, then you have to be an informed speculator. I'm lost. It is disorienting, right? Because it's basically like everything that anybody has ever said about how you should trade is not effective. Pretty much. That's pretty much what I'm saying. Okay. Yeah, I should probably see there's lots of nuance in here. So how are people making millions on social media? I'll tell you how. They're lucky. Actually, the thing is there is the easiest way to make money. Let me tell you something. The easiest way to make money in the short term, not the long term. This is, if you do this, you're probably not going to have a profitable 5-year history. But if you do this, you probably can get a year or two of profitable. Okay. And what do? Take excessive risk. So if you take excessive risk, you generally will make money. So if I come in and I say, the trend is down, I'm going to take a fill here and if it gets filled, I'll only take one tick, and it has to move 4 ticks against me. Actually, let's do 2. Let's do 2. Let's say it needs to go 2 ticks in my favor, or it can go 8 ticks against me. Okay. And under those conditions, you will probably win 80% of the time because your target is so much closer than your stop. Okay. So in the short term, you make money. The problem is that you are almost guaranteed at some point to run into a drawdown where that loses multiple times in a row. And because you're taking so much risk for such a little gain, when you are losing, you lose 4 times as much, essentially. Right? And so that strategy crashes and burns really, really quickly. But it's more than enough time to be able to go on Twitter and show people all the millions of dollars that you're making and so on and so forth. So there's the strategy. That's what most of these people are doing. They're taking excessive risk. Now, I think that that's an important point to understand because if you combine that with being informed and understanding the order flow that you're seeing at that time, you probably could make a good amount of money. And maybe you can, continue to be successful with that over a period of time. I think part of Seth's problem is that he's not willing to take the excessive risk, right? You take excessive risk, combine that with informed trading and order flow, and you really are informed, maybe we'd do better. Be honest, I haven't really ever honestly tried and gave my all with the excessive risk sort of thing. Looks like I missed a trade there though. See, I put my order out and hoped to get filled, but they just fell through without me. So I don't know what's going on, but everything's moving here. Am I missing a headline? Well, 3 minutes ago, I see poll Federal Reserve to cut federal funds rate in Q2, say 86% of 123 economists. That doesn't necessarily explain the move. Strong dollar, good points. It could be something from China, huh? Strong dollar, but is the strong dollar causing the treasuries to sell? Or is the dollar strong because the treasuries are selling? I'm going to say that I think in this situation that it is more likely the treasuries are moving the dollar. Because there was flows that came in and we've seen a pretty strong 15,000 net contracts selling through here and across the curve as well on all 3 of them. So I don't know about this particular price, but we definitely had a sell there. If I had gotten filled at 07.5, that would have been a great trade. But if I was only taking 2 ticks, I'd already be out, right? But I don't know if I'm really informed enough to be making that trade. The dog wags the internet. Okay, so there's this book. I mean, the issue is that there's not answers, right? So here's the bigger thing we didn't really talk about, but the market is very flexible, right? If there's some sort of edge out there, people start trading that edge, and people trading that edge changes how the market behaves. So you really can't go out and listen to somebody else and take their setup and make money from it. Because if its setup actually works, then eventually enough people will start trading and it will cease to be an edge. That's the way that the market works. So yes, all of these social media gurus that are selling you on trying, I'm not trying to sell people on to day trade. I'm pretty open about that. If you try to do this, you will probably lose money. And my primary goal with the day trading here is not necessarily to make the most money. I'm more interested in what makes me the best trader and understanding the market. I'm more interested in that than I am in making the money. And ultimately, those things will make you money in the long run. But maybe we're starting to realize that the way that they make you money is maybe not necessarily from day trading, right? Yeah, probably. I think that, and the reason why I'm looking at doing a fund is because I'm realizing that there's these people running funds and making literally millions of dollars, and I know more about this shit than they do. Right? Like, it just... Hey, but anyways, here's a book. It's called Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot and friends. Okay. Jean-Philippe Bouchot is one of the co-founders of Capital Fund Management, which is essentially the top performing CTA fund in our space. They have a fund called the Discus Fund, which is essentially a momentum fund. Okay, so this is a guy with like performance under his belt, per se, right? But he's primarily a researcher, and he started in physics. Okay, so if you read that book is basically everything that we know. Like, how does the market actually behave? That book tells us the things that we've proven. And that's it. Will that information make you a profitable trader? Maybe, maybe not. But it's what you got. You don't need 5 years? Yes, you do. Okay, so let's talk about this. If you've never read Fooled by Randomness by Nassim Taleb, then I would recommend giving that a read, or any of Nassim Taleb's other works. But essentially, when you get into it, the issue that you're going to find is that markets are fat-tailed. I think that a lot of day traders think that because they're using set stops and targets that they are not vulnerable to fat tails. But you're going to have some days where you make more money or lose more money than others. So you can't look at the distribution of your individual trades, but you can look at the distribution of your daily or weekly returns, right? So if you have a day where you lose literally more money than you ever made the whole rest of the time using that strategy, is that a profitable strategy? No, it is not. So in order to prove that a strategy is profitable, you need to have enough data to be sure that you've actually accounted for the tails. You have enough data that you actually have some tail events in that data set to show you that, like, the strategy actually works, right? How much data do you need? Well, that's where it gets kind of crazy, because the more fat-tailed the distribution is, the more data points that you need. And it increases exponentially. So this is why I always go into, what if you had an edge that was only a 1% edge? Okay. You were profitable 51% of the time, and you lost 49% of the time. Equal risk reward, okay, but 1% edge, okay? If you take 100 trades, then, and 51% of them are profitable and 49% of them are unprofitable, then you will have a profit. You will have a net profit of 2 trades, right? But how sure are you that you take another 100 trades that you're going to come out with those 2 trades profitable? Probably not very, because there's a margin of error, right? So let's times it by 10. You take in 1,000 trades. Now you'll have 510 trades and 490 trades that lose. So you'll have a net difference of 20 trades that are the difference, right? Do you feel more confident about that? I'd say a lot more confident than I did with 100. But I think that the problem is that, again, there's fat tails, right? So if there's one day that is equal to 200 of those trades, then it's not profitable, right? So it actually turns out that it's not until you get to about 10,000 trades that you can really feel confident about the result that you're getting in like your backtester, for instance, okay? And in addition to that, it needs to be over a large enough, like, different variety of markets, right? Like, one of the things that I'm seeing a lot right now is people will say, oh, I backtested this over the last 3 years or something like that, and it was profitable. I was like, oh, okay, yeah, but you realize that the last 4 years have been the most bizarre, non-standard market ever, right? So how does it work if you run it on data from before 2020? Don't you think that it would be better if it worked on data before 2020 and after 2020? Maybe it's not necessary, but it's better. So that's why 5 years and 10,000 trades kind of becomes the standard. So yes, there's all sorts of people out there that they claim to be profitable, and they say, I've been profitable over the last year. And I guarantee, because trust me, guys, I've been doing this a long time now, okay? I've been in this community for a long time. Those guys almost always blow it all. They talk all big and they think that they've got it all figured out, and then they blow it all. And they say, oh, I was foolish, but the thing still works. That's what they'll tell you. That's why this could be the first leg of a meta order short. I agree. I agree. So, on sim here, I'm going to take that middle area in the hopes that we get some continuation. And I do kind of wonder if this is not front running for the Richmond Fed. I think that it's either front running for the Richmond Fed or something is going on with more China stuff. Like maybe Chinese banks are doing something. Although I don't know if that would make sense, because wouldn't that weaken the dollar if they're out buying the yuan and selling the dollar? So I don't know if it can be that. I am not familiar with a lobster, but getting good data is important. I went to a seminar where a fund manager came, and all he talked about was economic policies in the sector which might see growth. He did not show charts or indicators and see the bigger picture. Yeah. So I'm telling you, man, there are fund managers out there today. They know about running a fund. I don't know anything about running a fund. Okay. And that's really important too. And like, how do you get people to invest in your fund and all of that sort of, those are important. Okay. But there are people out there today that understand the markets less than we do, making millions of dollars from it. Because they just have a really simple momentum strategy and the money to do it. Okay, use spread trades to hedge risk. That is something I'm interested in exploring more. So I just finished reading a book about momentum strategies, and that kind of gave me some ideas about using the term structure and so forth for certain strategies. I think that the edge that I would be finding here would be more of a daily edge than like a day trading strategy, but perhaps we can use that information to make some day trades with it. Maybe, we'll see. I have another book that's like position sizing. I don't know if I'm going to get anything out of it, but I do want to read that book. And then after, and I have a test that I'm taking at the end of this month. Well, once we get through with the test, I should be able to switch back focus to making a couple more videos and doing a little bit more back testing and stuff like that. So one of the issues I have right now is that the data is not very good. Like, I can use the micros. I can use the micro treasury yield futures as like the yield curve and everything. But because of the low liquidity, I don't know if those numbers are really very good. So I might need to like pay for a data source or something like that, right? Okay. So I'm putting my limit order like right on the edge of where I think it might be a little difficult to get filled. And then if they fill it, I will put it back up. You know, I'll try and take it back up here. So you can see it actually pulled, but it didn't attract market orders to hit it. If I really, really want this filled, I think that I would want to bring it up to 06.5, but I think that we're early enough in this that I can leave it there for now. Anyways, well, like I said, if a guy comes in and he makes money every day or for 3 years, and then at the end of 3 years he has a losing day where he loses more in that losing day than he ever made all of the other 3 years of profitability. He loses it all in one day. Is he really actually a profitable trader? See, what happens, we as humans, we like to see this. If we're doing, oh my gosh, that's black. Hold on. We as humans, we like to see this. Normal distribution, right? And what we do is we do this. These are out, like these are flukes. These don't, you know, I don't want to incorporate that in, you know, I'm going to discard those ones. This is what I really care about, right? And that's what we do in trading is like, so you see a profitable trader and then this far left tail comes along and you say, well, he was having a bad day. When it's endemic in the strategy, this is guaranteed to happen. Eventually, this will happen if you're really following the strategy the way that you claim you are. Right? I think that part of the key, if you're going to trade a strategy like that, part of the key is to be informed so that when that left tail is happening, you can go, oh, I'm not going to trade it. And avoid the far left tail. Right? But when trading, you can't ignore those. You can't ignore the tails. The tails in trading, you can completely ignore this. And if you can make money just on these tails, you've got something that will make money for you. That's how Nassim Taleb made his fortune. Was he only cared about the tails. You can't ignore the tails, guys. But that's what most retail traders do. They ignore the tails. They say, this far left tail, that was a fluke. Doesn't matter. I'm still a profitable trader, even though I just lost everything just now. Yada yada. I'm just saying there's probably no way that you could actually see the black on the dark background that I've got. It needs to be yellow. Right. Take it as the counterexample, somebody that comes in and they lose money every day for 3 years. And then at the end of that 3 years, they catch a trade that is just makes more money, twice as much money as they ever lost all of the other 3 years. Are they a profitable trader? Well, you only got one sample. Okay. Do that, catch a few of those over 10,000 trades, and then maybe we can say something about it, right? But well, they are pretty comfortable sitting there my bid and even touching it, but no fill yet. So here's something I'm gonna watch here in this situation is like I have a pretty good spot in the queue, so that should be good. But I wouldn't be surprised to see this tick down and only trade 600 contracts. Like the people behind me are I think in this situation maybe somewhat likely to pull. So that's something that happens. Like kind of always keep an eye on there in that situation. Do the market makers get flighty there? Okay, so the reason why I come down to 5 years is just because of my experience in backtesting. Like that's what it takes. So again, you have to have enough samples within the tails, right? And there's some math that you can do behind this that says, okay, for a statistically significant result, how many samples do you need? And the number of samples that you need scales exponentially with the kurtosis of the distribution, which is to say, the fatter the tails are, the longer those tails are, the more data samples that you need. Okay. And it just happens that for most strategies that number comes out to 10,000 trades in 5 years. But most strategies will not survive a backtest of 5 years. If you've got a back, especially if you have a backtest on intraday data, like let's say you write a strategy in NinjaTrader, you backtest it over 5 years as profitable, and you're able to make it profitable across multiple instruments too. I'd really want to see that because I've never seen that before. I can curve fit a strategy to be profitable over 5 years, but then it won't work over another instrument. But even over 5 years, curve fitting it is hard. So if you got something that's profitable over 5 years, that's really impressive. Now you would still want to look at things like what's the Sharpe ratio of that and all of that sort of jazz, but okay, why don't you use your indicators like the resting orders and level 2 changes and stuff? Just because those are things that I see on my own. So those indicators were created so that I could automate stuff, right? I have a little bit more work to do with my data collection and everything, where theoretically I should be able to go and backtest this stuff, right? And then I could show over 2 years or whatever how effective is that particular strategy or that particular indicator. But and then those would be useful. Basically, those are useful for creating a robot, but those are things that you should be able to see on your own when you're watching the DOM. Rancho says, yes, I never had a strategy on a low time frame being profitable for 5 years. I'm glad that makes sense, because usually when I explain that, people don't understand the... For my indicator suite, the indicators that are that the value comes from, that I think is it worth charging $100 for, are those spread charts and the dollar index and that stuff. I can't trade without that. There are some like free indicators that are kind of similar, but they're not on the same level. And those are things that I think will benefit anybody that's futures trading, you know? So how many? Oh, so now I'm at 322 in line. Okay. Is there something wrong with my DOM? It looks normal to me. Other than that, maybe I would want to recenter it. Seeing it all the way down there, it kind of makes me, it's comforting that it's like, well, it's unlikely to continue much further yet. Okay, why are those two really useful? So, especially when I come over here, so what I'm doing, what is I have some sort of bias for the day where I say I think that the sum of the order flows that are going to come through within my trading time period are going to be short, right? Then I'm going to come in, I'm going to watch the order flow, and I'm going to be looking for signs of confirmation signs that short is happening. So today we did get that short. I didn't predict coming through, but I am kind of looking for maybe it continues. We're about to have some news here, so I should keep that in mind. Okay, but you saw here this chart down at the bottom, that is cumulative deltas. So they sold on all three of them. Okay. Now, something that you might see though is you might see that in ZF the cumulative delta was actually up, and in ZB it was down. And then when you look at the spread, which is the one just above that, what you would probably see is the spread moving up like that. Okay. So basically, the spread means that you will see different amounts of buying and selling between the different legs of this. And so I need to be able to keep track of the spread historically, because I have a hard time remembering. I mean, I can see the spread on my DOM. I can see that this one moved down more, right? I can see that this one moved down more than this one. But like, that's hard to remember, especially with all the twists and turns and so forth, right? So I need to be able to know what is the spread doing right now, and then I have to discount what I'm seeing in the order flow against that. So if we're having a move down, if we're having a bear steepener, which would mean we're moving down, but the 30-year is moving down more than the 5-year, right? Then if I see some order flow over here in the 5-year that is buying, okay, well, that's a steepener is buy the 5-year, sell the 30. So I shouldn't be surprised to see some buying over here in the 5-year, and that does not mean that it's turning around. That's just spread volume. So I'm not going to exit my trade or do something because I see buying in the 5-year, right? But if I see buying in the 30-year, then that's a much bigger deal to me, right? So that's why having those spreads are so very, very important for what I trade. Even if you're trading equity indexes, you want to do that sort of analysis on like the NASDAQ versus the S&P and so forth. Okay, so here's the Richmond Fed. It is more negative than anticipated, negative 15 versus negative 6. Can Thinkorswim go back 5 years? I don't know. Probably. For daily data, yes. That's got, like what we were saying earlier, you usually only get 1 to 2 years worth of data that would allow you to do like order flow analysis unless you saved it yourself. So I've been saving it myself for about 2 years, and I think there was a bug that kind of prevented me from doing a back test with those, but I think that I know how to fix that, and then I can do better back tests. We'll see what happens. Okay, so after that news, they're coming back up to this middle area. I'm a little bit worried about adding another contract at the moment, so I'm gonna sit tight maybe. I could potentially put one at 08 half 09, but there's already a big order there, so I'm just gonna wait. Now the other one is the dollar, right? So there are also correlations between the dollar and the treasuries. or the treasuries and the Japanese yen. So something that you'll see a lot is like, let's say we're trading in a tight range. Let's say that we're trading in a tight range. And like every time that we get to the top of that range, there's a big iceberg and they just can't get through it. And you're like, what the heck? You know, this is never going to work. We're just going to stay stuck in this range. So next time you see the iceberg, you sell it. And then this time there's no iceberg there. And it just goes up 1, 2, 4, 10 ticks. Hardly any volume whatsoever. Each of those ticks is just like all of a sudden it's going through. What's going on? Because it's moving up even though I'm not seeing market orders in my instrument. Why is that? Probably it's a correlation. So then you're probably going to come over here and look at the dollar and the Japanese yen, and you're going to see, oh yes, there was a move in the Japanese yen up. Ah, okay, there was a piece of news that from some guy at the Bank of Japan saying something, and that moved the yen, and that's why the treasuries moved, right? So now I know why that move happened. So if that move up happened, but I have some larger edge that says that they're supposed to be net selling today, I could still see that net selling maybe, right? But I basically, for every move in every set of orders, I need ways of, kind of filtering it to say, this was because of this correlation. This was order flow coming directly into my market. And this is maybe what was driving that flow, right? That's why those are so important to the way that I trade. Like bigger picture, like think about it. How are you trading stuff if you don't know what the value of the thing that you're trading in is worth, right? Because the value of the currency you're trading in changes the value of all the things that you're trading, right? So to really understand what's going on, having the dollar index is very, very important. So that's why those are the most important ones in that suite. And then all of those order flow indicators, I mean, those are all showing things that you can't see any other way. I don't have some explicit strategy or proof of like how to use them, but I think they are very, very interesting, and I put them there so that, you can make your own robot and maybe you make something with it. And I hopefully this year will make some more robots with those. So we'll see. You were lagging. And of course, I try to make it, fairly cheap so that basically everybody that uses NinjaTrader could buy it. I'm getting a little bit of dry mouth today. Cold up there? You know what? It's actually getting warm over here. Was like when I went to work out yesterday, it was like 50 degrees in my garage. Didn't have to wear a hat. I'm kind of, I don't know. I feel like mentally and emotionally recovered, but I feel a little physically tired, and not like sleepy tired, like, like I moved a couch. So I had this couch in my garage because we got a new couch. I put that couch in the garage, tried to sell it. Nobody wants to pay what I think it would be worth, so I just decided to put it in my basement. But, it's like one of those electric reclining couches, so it was heavy AF. And we carried it down there, and I was sore the next day. And then it worked out yesterday, which was a more intense workout than I've had in a while. So, like, I just looking at, when I came in and I looked at my face in the camera, oh, it's not so bad now. But when I first started, I was like, oh my gosh, I look terrible. You've had a real Florida winter? Oh, really? So that's that cold weather has come all the way down into Florida? Well, we're in an El Nino year, right? So like it's very interesting to me. My understanding is that because the northern polar ice cap is not very big, it's okay, you always look terrible, thanks. Because the northern ice cap is not very big, it makes the polar vortex up there less stable. So what's happening is we're in an El Nino year where there is more warm air and warm water down in the south. And so that results in a lot of, storm systems developing in those southern oceans and coming up, especially like coming up from the Gulf. And when the polar vortex becomes unstable, that cold air comes down and mixes up with it, and that's when you get these really big snowstorms that we've just had. So as this continues to go, you might have a hot summer in the south. In Utah, we're kind of like just on the edge between where that cold air comes down and where that warm air comes up. And so it's kind of a mix as to whether or not we'll be cold or warm on an El Nino year like that. How El Nino and El Nina affects us in Utah is a little fuzzy, essentially. But if it continues to be an El Nino, which I don't know how that works, but if it continues to be an El Nino, you could have a hot year in the summer. Octavius flipped. Well, I'm thinking about bailing on it here at 08.5 because earlier I was like, maybe I'll add another contract. It's been about 10 minutes, so like if there's going to be more selling, I would have thought it'd come through by now. Actually, there's an iceberg right there at 08. I think that I will. I don't like that that big order at 07.5. That is a little fishy to me. But probably better safe than sorry. If I can get out of it with just taking one tick, that's okay. Okay. So I just showed you guys an example there, though, of taking on excessive risk, right? Because the amount that I could have lost if it came back up to the top of that was going to be a lot, especially if I had another contract, right? So that's probably not like a profitable way of doing things in the long run. But it makes me feel good. Makes me feel good. I don't know, doing back tests on daily data makes me feel good. I want to make one that's based on the yield curve though. Some work to do. So much things to do and not enough attention span to do it. So maybe I should just focus all my efforts on making better content for you guys. Because if there's any resource that I have that's valuable, it's this YouTube channel. And I should try and leverage that as much as I can. Like one of the issues I am gonna get the Series 3. I don't know what I'm gonna do with it. I could start a fund. I don't think that I have all the skills necessary to do a fund. Because like the big thing is if I'm going to run a fund, I would need to like raise $10 million. Where am I going to raise $10 million from? I don't know people for $10 million. I don't, Well, we'll see. We'll do stuff on momentum strategies and see what I come out with, if I even have something that I really want to turn into a fund. But there are some videos. I think the next video that I want to do is what retail traders get wrong about momentum. Because I think that once retail traders understand like what momentum actually is, that they'll kind of see how they've kind of been misled about day trading to some extent, right? So they say, oh, well, this works. Like, because they all read the Jack Swagger books and they didn't realize that, like, that wasn't day trading. First step, buy a Porsche. Well, I mean, I kind of would like to. Like a nice hatchback. I want a hatchback. Once again, it comes back to the issue of, like, I don't drive that much. My wife drives my car more than I do. And I mean, she has the van. So maybe I should just get a truck. Small truck. But I like to think about spending money on things, and then I never do it. Because I want to put more money. I definitely... So, last year, when I got a raise, I started putting a lot more money into my IRA so that I could max out my IRA, right? But that was because it happened halfway through the year. So now, you know, to max out my IRA, I can put half as much in. So that's a little bit that I can do some stuff with. So there's a couple of other things that I want to square away. One thing that I have to deal with now is now that, like, all of the FSA stuff is cleared and everything, there's some medical bills that I can pay that I didn't have enough in the FSA last year. So I need to do that and look at what that is and pay those off. But then within a few months, I should be able to put like $500 a month into a risk play. So I think that I could put that money into buying individual stocks. I'm still kind of having problems with coming up with a systemic way of determining which stocks I want to get into. But we could have, some of them could be, you know, just diversifying my stock portfolio first. And then after that, some of them could be options plays. Why 911 Carrera? Saw 911 over the other day at there's a body shop somewhere around here. Yeah, why that one? Why not like the spiders and the... So I don't know what a 7018 is about. I guess, no, those ones are pretty, they're 100,000s. 911 Turbo. But I think I want a hatchback though. So like, you know, like one of these. The 1718 is a chick car. Oh man. I don't want a hybrid though. I don't think I want an SUV either. I think my wife would prefer an SUV. What? She wants a big SUV. I don't understand the appeal to it, man. Get a Cadillac Escalade, I guess. I should do that. I should take her to like the Cadillac dealership and put her in an Escalade. And then she'll probably never want anything else, right? Your wife will hate it. You want to represent yourself as a car guy? Buy a 911 ST. It's kind of funny. Like the thing is, I have too many hobbies, right? Like it's unfortunate that Unreal Tournament is not a popular thing amongst day traders that could be used as to build rapport and bring a lot more people to the channel or something like that, right? Like, because that was one of the things I know a lot about. I spent way so much on that game. I've been playing it lately. I was like, I want to get my reflexes back up here, man. So I've been playing. Practice in the hopes that maybe a good shooter will come along eventually and I can do that. Let's see. But there's all sorts of things that I could probably get into. You know, like one of the things is like Jim Cramer, he understands this, right? Because he does it with sports. But like, I kind of feel like sports are over, man. Like my generation doesn't care anymore. And 44, I have no chance anymore. Oh, dude, yeah. Like, if it's a game purely about reflexes, then yeah, it sucks. And a lot of the games out there are purely about reflexes. We do that. Where is it? The human benchmark. Oh, I don't have an account. Let's make an account. Oh, I already have one. I think it's just because we don't care about, no, like millennials in general do not care about sports as much. There we go. Okay, so we'll do the reaction time here. That's not bad. Below 200 would be fast for me, so do one more. That's not bad. I'm pretty good today. So I was saying, like, I feel physically tired, but I feel like mentally, I think that mentally and emotionally, I'm feeling pretty good today. Then what's the other one? There's another, no. Human benchmark, no. Aim trainer, yes. Got to get all of the... good posture and everything. No, that wasn't very good. See, that was below. I don't know how people are doing it so fast. So higher is better, right? Higher percentile is better. So my reaction time is still on par, but apparently my speed with aim training is not very good. See, like, that's me going as fast as I can go, and it's still, like, not even average. What? Most people are getting into 450 milliseconds? What? I guess I'm not that far off, then. It looks like... You know what? I don't think that one is a very good test, because it's like the speed of it is, I don't think, very good. I think it should be, like... Well, I don't know. I think accuracy matters too, right? Accuracy matters too, guys. Is there one that's like RTS mouse trainer? That's kind of what I'm more interested in. Oh, there's mouse accuracy. It's a good pastime to keep scalpers sharp. Osu. That's what I need to do. It's Osu. But I feel like Osu is like most of the time. Osu is too like weird to. I should do it. I should go and install Osu. I have to. You know what? So on my last machine, like I frequently found Steam using more resources than I thought it should. So I haven't installed Steam yet, but now I want to install Osu. I don't know. I want like an aim trainer game that is like a real game and is not 3D. Maybe Mission Red. That one sounds familiar. That's weird. I think that website is defunct. Maybe aim booster? That sounds familiar. See, these ones, I hate these ones because they're just kind of like... And then it does that. I hate that. No, thank you. I'm looking for recommendations, and it just keeps coming back to Osu. What's this one? It says I've already done this. Oh, that's not a game. That was just what he was using to record things. Oh, I don't need to install Steam to do Osu, do I? Osu laser. New version, apparently. Okay, cool. What time is it? 8:30? Okay. Mobalytics. Okay. Okay. Well, this one seems too easy. But again, I wanted to do more than just that, you know, like, I don't know. I want like a real game. Oh, now all of a sudden oh, what's this? Oh, that's funny. They want you to keep track of all of your reloads too. Well, that makes it a lot harder. That's why I hate MOBAs, though. Oh. Huh. Okay. I don't like how loud the sounds are. I think that this one, oh no, it was a time. Yeah, okay. Interesting. Nyan cat forever. Good grief. Oh my gosh. Oh my gosh. I don't think that you guys could hear that, but that was so effing loud. That was so effing loud. Yo, you played that before? Looks like I could have like waited for it to come back to that even area, but I'm starting to see like relatively large icebergs and stuff. So I kind of think that maybe somebody took a trade. Like maybe they were placing a bet for that news and now it's passed, and like, because this just kind of looks like a market that doesn't want to go anywhere. I'm maybe unfairly dismissing this market because we could probably market make pretty effectively in here, yeah. Like if I just played the range, if I was only going for 1 or 2 ticks, I think I'd probably be doing okay. I hate the ones that have like the loudest noises. Ugh. The best aim trainer online. 3D aim trainer. Blah, 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 blah. If I wanted it to be 3D, I would just use Kovacs. Oh, look at them come down. Look at that. Does that make you suspicious? You know what? I'm going to go for it. I'm going to go for it. Makes me suspicious, but I'm gonna buy anyways. Well, getting there at 06.5 is not encouraging, but we talk about how useless Google feels these days. Hmm. You know, thinking more and more about the way the treasuries have been lately, I'm starting to think that I should try playing the mean reversion game with it. Because that's the game that's been winning lately. Like, you get like these moves overnight, and then it does nothing during our session. And I could pull ticks out of that. And or realize when it's not going to be that and go for the trend. Well, then like that at 06.5. So when aim400kg.com is a lot better. It has a bunch of different ones. They're all kind of like a play on the same theme, but like okay. Well, not a big order anymore, but still at our spot. Tricky aiming, huh? Oh, jeez. Am I supposed to hit that? Are you kidding me? No, thank you. No, thank you. I don't know. I'm thinking that trying to get this like 04.5 might be real hard. Well, we got about 15 minutes left. Oh, hey. Okay. Not helpful, but okay. Let's check news, a little news here. After the Bank of Japan, Goldman sees USD JPY sliding back to 145.50 before reversing. Let's read this. This sounds important. Getting some good hits into 05.5 now. Maybe I'm reading it. Maybe my initial impression was correct. For those who missed it, the latest Bank of Japan announcement held no surprises. The Japanese central bank maintained the status quo across all monetary policy parameters, yield curve control, asset purchase programs, and forward guidance. The only notable revision was that the core CPI forecast was revised down for 2024 and up for 2025. Core CPI remains unchanged. While the Bank of Japan's statement was viewed as dovish, hawkish comments from Ueda during the presser spooked yen shorts as they suggested the Bank of Japan is a step closer to ending the negative interest rate in the near future. Specifically, Ueda said that labor unions are asking for higher pay gains in annual wage negotiations and noted that he is still watching to gauge the state of progress toward a virtuous cycle as rippling effects from higher wages spread towards prices little by little. He says he'll continue to assess data carefully, including information on wage negotiations. More importantly, Ueda said that many businesses have already announced plans to raise interest rates. That came after he earlier noted that certain amount of key information will be available before the March meeting. He also noted, however, that it's still uncertain how widespread hikes will be or how large they'll be. Bank of Japan had pledged to decide on negative rate with a view on inflation and added that reaching the bank's inflation goal doesn't necessarily require that the economy show a clear plus in the GDP gap. Next, we turn to commentary from Goldman's trading desk, starting with FX specialist Michael Cahill, who noted that there are some minor hawkish elements at the margin in the decision. The bank did not revise down median new core inflation projections as we had expected, instead leaving them at 1.9%. The bank also included a new line that, taking account of wage setting behavior, the likelihood of realizing this outlook has continued to gradually rise, although there remain high uncertainties over future developments. Demand for the Japanese currency resurfaced and risks now trade at 93 basis points, which suggests that Bull's conviction is growing for tighter Bank of Japan policy and that the March meeting weighing could be repriced higher. FX trader Luke Molyneux, who writes that the slightly hawkish tilt to Ueda's comments garnering some attention. Whilst we agree with this to some extent, we think much of this move comes from overextension to the top side that's been so well publicized, and the market now happy to come back in and sell dollars now that the Bank of Japan is out of the way. Positioning wise in the short term, short dollar trade now feels much cleaner after much of that short dollar JPY positioning in the order book was cleared out last week on the move through 146 area. Longer term, Goldman Trader believes that while Japan JPY should remain in the funding camp of carry pairs, he is playing for the tactical pullback towards 145.50 before the resumption higher. Okay. 16 keeps going offer, but not. And we did see a little bit of volume at 05.5, but nothing too good. I think I probably could hold it. Maybe I will hold it just for the fun of it, but I don't think I'm gonna touch it. Bitcoin breaks below 39K amid FTX and Mt. Gox liquidation chatter. As the Federal Reserve proceeds with quantitative tightening, markets are increasingly sensitive to funding and liquidity conditions. That makes it paramount to identify ahead of time when funding stress is about to manifest. September 2019 is not a month the Fed wants to revisit. Funding conditions rapidly deteriorated, leading to spikes higher in repo and other short-term interest rates that are at the base of financial markets. Without smoothly functioning funding markets, all assets are vulnerable as the cost of financing positions becomes punitive or evaporates altogether. Can we identify when funding stress is imminent? It's not easy, as it typically happens abruptly, but we can build a funding stress trigger that in the past has given at least a crucial day or two notice that funding rates may be about to shift noticeably higher, if and when the trigger activates in the current cycle would be a sign that QT has run its course. First, a brief reminder, in 2019, then as now, the Fed has been reducing the size of its balance sheet, while at the same time, the Treasury issuance was rising. Even though the Fed has stopped its balance sheet runoff in August 2019, reserves continued to fall as other liabilities on its balance sheet, such as the Treasury account, rose. The straws that broke the camel's back were a corporate tax rate payment day and a large settlement of long-term U.S. Treasuries. The tax payment drained reserves as the Treasury deposited the proceeds at the TGA, while the settlement of U.S. Treasuries meant dealers' demand for repo funding jumped. Cue a sudden non-linear deterioration in funding markets that led to the Fed having to step in and offer term and overnight repo loans. Funding rates quickly fell back down, but the risk to financial markets from a repeat of this episode is real and therefore very much worth trying to prepare for. That's even more the case as asset prices' sensitivity to the Fed's balance sheet today is higher than it was in 2019. The Treasury's decision to fund most of its borrowing using bills in this cycle, therefore making use of the trillions of reserves that have been idling in the Fed's reverse repo facility, has meant stocks and bonds have continued to rise despite the government running a vast fiscal deficit. Let me read that again. The Treasury's decision to fund most of its borrowing using bills in this cycle, therefore making use of the trillions of reserves that have been idling in the Fed's reverse repo facility, has meant stocks and bonds have continued to rise despite the government running a vast fiscal deficit. The chart below shows stock sensitivity, i.e. their beta, to reserves plus the domestic reverse repo facility. That sensitivity is rising as the reverse repo facility falls, indicating that stocks are becoming more vulnerable to falling reserves. The same is true for treasuries. That's why holders of stocks and bonds should care about how fast the reverse repo facility is falling and the total amount of reserves in the system. The big unknown is how many reserves are needed for the smooth functioning of funding markets. Fed member Christopher Waller has suggested that the lowest comfortable level of reserves is about 10 to 11% of GDP, i.e. 3 trillion, compared with the current level of 3.6 trillion. The Fed's Senior Financial Officer Survey also asks banks what they think their lowest comfortable level of reserves is and how much of a buffer they would prefer to hold above it. The problem with using this information as a basis for a funding stress signal is that it is lagging. Reserves are released on a weekly basis while the survey is only biannual. Instead, we need to use daily data in building the finance stress trigger. We use a few key insights. Funding stress tends to show up first at the tails of the daily repo rates traded between counterparties. Funding volumes of domestic banks in federal funds typically rise as total reserves fall, while foreign banks' volumes tend to decline when funding issues develop. Foreign banks are much bigger borrowers of Fed funds than their domestic counterparts. Overall funding volumes, domestic plus foreign banks, thus tend to initially fall before quickly rising again at the time of funding problems. Stress in funding markets is typically preceded by a rise in the volatility of the spread between different funding rates. The trigger shown in the charts below it uses only 4 criteria based on the above points, bearing in mind Einstein's maxim that models should be as simple as possible but no simpler. It's only activated twice, in 2018 and 2019. In 2018, it triggered on the 20th of December. This was several days before the sharp rise in funding rates at the end of the year. The normal year-end turn, when demand for cash rises, was exacerbated by Basel III regulation for globally systemically important banks, who stockpiled reserves to ensure their low absorbency requirements did not rise. Oh, we're going to get a fill here. So here is their chart. And I can see where it's spiked up there, but I also see that we are like overall high. So if we get a quote unquote spike, that would be when they would be concerned, I suppose. Or is it when you get a spike, that's the trigger? The trigger also activated in the 2019 funding episode, perhaps appropriately on Friday the 13th of September, ahead of the acute stress seen the following week that led to the Fed's emergency repo provisioning. No signal is perfect and all are necessarily subject to retrofitting bias. There's no guarantee the next funding flare-up will manifest itself exactly in the same way as it did in prior episodes. The possibility of a false negative means maintaining vigilance to funding market conditions is essential even in the absence of the signal becoming active. Furthermore, the Fed introduced a standing repo facility in 2021, allowing the banks to access funding at a punitive rate, while it has also been trying to destigmatize use of the discount window. Nevertheless, there's no guarantee either of these would see notable use before the funding stress cat is out of the bag. The trigger, on the other hand, uses daily price and volume data that ideally captures general signs of funding stress before it significantly worsens. In the environment of deeply intertwined fiscal and monetary policy, assets are increasingly sensitive to funding markets, while the latter are more prone to abrupt meltdowns. Butterflies flapping their wings in the monetary plumbing should therefore be taken seriously by traders and investors across all asset classes. That was by Simon White, Bloomberg macro strategist. Interesting. We got 5 minutes. I will read the Bitcoin story. It's been an ugly sell the news period since the spot Bitcoin ETFs were unleashed by a desperately begrudging SEC. Having peaked above 4,900 on the day the new ETFs opened, Bitcoin has broken back below 39,000 overnight. Data from CoinGlass shows long position liquidations for Bitcoin have been considerable in the days since the new ETFs were launched. But today's data is significantly lower, suggesting the initial purge may be slowing. This is coincidentally great news for Liz Warren and Gary Gensler, who can gloat at their warnings of the dangers to investors of placing their hard-earned wages into these volatile terrorist funding assets. But maybe there's more to it. Maybe this is not just a sell the news-driven profit-taking or GBTC Grayscale Bitcoin discount ARB-driven recycling. First things first, net of Grayscale Bitcoin outflows, the whole spot ETF complex has seen several inflows around 1 billion since inception, which is about on par with what the initial estimates were, was 1 billion when they went live and 10 billion over the year. The assumption in the above table is that the Bitcoin Grayscale outflows are simply being recycled into the new ETFs and should therefore be netted off against the inflows into the new ETFs. Grayscale has been the dominant factor in outflows since inception. However, there could be another factor involved. CoinDesk reports a large chunk of the exodus from Grayscale was FTX's bankruptcy estate, dumping 22 million shares, according to the private data CoinDesk reviewed and 2 people familiar with the matter. 22 million shares it sold, which took FTX's Grayscale ownership down to 0, were worth close to $1 billion. So instead of the Grayscale outflows being recycled and netted off, a large portion of them is FTX liquidation based, a one-off event, not a systemic pressure on the underlying crypto asset. There's also 1 billion, which means that there's actually more inflows into this than we were expecting. Interestingly, reports of the Grayscale liquidation has sent prices of claims on the crypto exchange for FTX soaring. Ahead of the January 25th estimation hearing, where creditors expect the ruling to favor their demand for in-kind repayments in cryptocurrency. FTX claims are now trading at almost 80 cents on the dollar, according to the Cherokee Acquisition, an investment banking firm that specializes in bankruptcy claims and providing liquidity on FTX claims. In theory, CoinDesk concludes, now that FTX is done selling its substantial holdings, the selling pressure could ease, since a bankruptcy estate liquidating holdings is a relatively unique event. However, there's a one-off event that could be weighing on underlying Bitcoin prices. The Mt. Gox trustee is reportedly getting ready to restart payments of Bitcoin and BCH on Bitstamp and Kraken accounts. As Cointelegraph reports, numerous Mt. Gox creditors reported receiving new emails from Mt. Gox about the completion of identity verification for crypto exchange accounts that are set to be used to repay Bitcoin and Bitcoin Cash. The email says that the exchange is now expected to accept the user's subscription to the agency receipt to receive repayment in Bitcoin/BCH. Mt. Gox is expected to repay its creditors 142,000 Bitcoin and 143,000 in the forked cryptocurrency Bitcoin Cash, in addition to 69 billion Japanese yen by October 2024. So, Grayscale supply pressure added to Mt. Gox supply pressure, both theoretically unique events, are weighing on crypto. The April halving will reduce supply significantly. There's another aspect to the Bitcoin complex, the legacy Bitcoin futures ETFs. Many assumed that investors would rotate from futures to spot ETFs, but so far that has not been the case at scale. Institutional funds have modestly reduced their large position, and hedge funds have marginally covered their short position. But implied funding rate, a measure of relative demand for longs versus shorts, has fallen significantly recently after soaring in Q4 ahead of the SEC approvals. However, the positive funding rate signals overall business remains towards the Bitcoin complex. Investors have sold more than $2 billion worth of Grayscale since it was converted into an exchange-traded fund earlier this month. A large chunk of that exodus was FTX's bankruptcy estate. And then this guy, I don't know who he is. Grayscale discount to NAV arbitrage trade led to greater than 1 billion selling to lock in profits of all that selling in a relatively short time. Bitcoin is still holding above 40K. Anyone who thinks Bitcoin is struggling right now has no idea how price discovery works. As soon as the FTX liquidation, Grayscale profit taking, and ETF speculation are done, Bitcoin will head back up to the top of the range with authority. I think probably. And reaccumulate after a cooldown to post-halving cost of production. Bitcoin's fixed monetary policy allows for proper planning. Having the 2024 halving can change your life. Study the cycles. Okay, so this guy is like totally trying to pump it, but and I also think that the possible upside of Bitcoin is maybe a little bit more limited than people realize. But I do think that there's a good chance that Bitcoin finds some support around here, just because overall we still expect like 10 billion in inflows to come, and we do have a halving coming up, so. But I don't want to touch it. Richmond Fed manufacturing survey crashes to lowest since COVID. Philly Fed services back into contraction. Okay, well, that's all we have time for today. I am going to take these contracts off here. And my new swag just noting that the Treasury's quote continued their slide. I don't know if it was a significant slide, but it did come down. Oh, come on. Can't catch a break today, can we, huh? All right, guys. Well, we will see tomorrow. Might get a little bit more activity tomorrow. So I will see you then. In the meantime, stay excellent.